If you're able to start trading and master it, you can make a new income for yourself and also compound your savings on your own terms. But if you don't have the right foundations or your trading systems are all over the place, you will obliterate your trading account and wreck your confidence and also your finances, and at best be a break-even trader, or at the worst, years and years of loss. Then you will leave yourself more confused as you fall into a strategy, or even worse, an indicator rabbit hole that are just a waste of time that the majority of new traders fall into. I've been trading for 5 years and I've also made it onto Forbes. I'm completely self-taught and I grew my following when I used to signal on Discord. So for a lot of you guys that are new to trading or already have experience, I'm gonna give you guys some insight that I wish I had so I could start off on the right track and do things properly. All in all, it would have made my trading experience a lot more enjoyable and also less frustrating, knowing that from the get-go, I'm on the right track to pursue. So what I'm going to show you today is a simple process I wish I took from the jump. I'll show you how to rewire your mind to think like a trader with years of experience. All the softwares you will need to be successful, how to do simple charting techniques that will instantly enhance your overall ability to trade, all the custom tools I have built and commissioned with my own money over the years, so you now have a clear path and the right tools to pursue trading. The realest thing I can tell you is if you want to be good at trading, you have to take it very seriously. There is absolutely no easy path to it. Every fiber of your being, all of your emotions that you knew existed or didn't know existed will be tested. And overall, it's about how you react to those emotions once they become exposed, because that reaction will have a direct impact on your finances and overall how you trade and your career with it, if there even is one. So let's dive into the trader mindset and understand what someone thinks if they're a winning or a losing trader. The losing trader is someone who is scatterbrained all over the place, jumping from strategy to strategy and not breaking any real ground for their future in trading. They also waste hours upon hours testing various combinations of indicators. They obsess over the outcomes of their trades, which perpetuates irrational and overly emotional behavior. A simple analogy is you can't get the result you want when problem solving if you don't clear the previous problem. The winning trader works to disprove things rather than try to make everything they touch turn to gold. They try to destroy what they make so they can find vital flaws that can be improved upon. Learn to compartmentalize your emotions inside your head. The winning trader tracks their performance while they're trading so they can go through each individual trade that they've taken and maybe even re-go through that mental state they were in and that process they went through to actually execute that trade. They do not sweep the stuff that they've done under the rug. It's all on the table, ready to be examined. Using a tracking system will help you to boil it down to just the raw winning probabilities and different averages for your trades and how they're going. By having this mindset, you're already ahead of 80% of traders. So now I'm going to talk about some softwares that are super helpful. First of all, we've got TradingView, which essentially is our textbook where we're going to be seeing all of our data, candlesticks, and all of our tickers. That way we can actually perform our TA and execute trades using that data. Second one, Google Sheets is going to be super helpful because you'll be able to label all of your trades, mark down where you entered, all of your screenshots from your trades. That way you can look back on them and see what you can improve upon for the future. What's super important as well is marking what you're trading, because if you're performing better on something over something else, it's probably a lot wiser to actually trade more of what you're doing really good on and understand why you're doing better on it. For exchanges, we'll talk about them. I'm really not glued to any exchange. I have a bunch of different exchanges that I use. I will say though, Binance has been the best for me just because it has really low fees and futures are enabled on it for crypto trading. So notice how my chart here is not cluttered with a bunch of indicators. There's so many things you can add to your chart, but it's better at first if it's just left blank. There are so many tools you can implement once you're really advanced, but for the majority of people, they set themselves up for failure by just starting with a system that doesn't actually work, and then they pancake on top of it a bunch of indicators that make everything a lot worse and more confusing. These successful people have a very blank chart, and they understand and learn about why the market moves as it does. And once they see success with the fundamentals of trading, then they add indicators maybe, one at a time, just to see if they can improve their strategy further by any means. So for the people who are doing this the wrong way, it is most likely because they're overthinking the steps they need to follow and are suffering from analysis paralysis. Since they don't understand what is necessary and what is not necessary, they are constantly searching through the internet trying to find strategies, and before they can gain any real understanding of this strategy, they get frustrated and find another. They just lack the knowledge to properly test what they find and also the discipline. And now, since you guys have access to TradingView, as I mentioned it before, what I'll do is in the link in the description, I'll include some of the free indicators that I've commissioned with my own money to improve my trading strategy. I'll give you access to the log that I give to all my clients. That way you can actually track all of your trades. There's space in there for you to punch in your entry, how much profit you made, your percentages, and also actually the URLs from TradingView to your actual chart in the moment. So that way you can look back on it as if it is real time and see the trade that you wanted to execute or you did execute, and all of the calculations are done on the sheet. So that way in a database on the side, you have all of your statistics and your summaries for how you're performing with trading overall. So what you can do is you can just research different brokers that have, the type of trading style that you want supported on their platform. So if you're going to get into commodities or, options trading, you're definitely not going to be on Binance, you'll be on something else. So make sure to research that stuff. I may include something in the description to help you out with getting started with different brokers that I trust and I've used personally. There are some universally well understood techniques that people use when they're actually trading. So I'm going to go over the two that are most easily applicable to any strategy. So you won't have to learn mine specifically. You can just take my knowledge and apply it to what you're already doing. What you'll be applying is my way of using stop losses and also levels to your own charts. So let's go ahead and dive into that now with some nice animation. So stop losses are just simply a tool that make it so you can't go into a certain amount of loss. That number is predefined when you set that stop loss initially. And traditionally how people use stop losses is they mark their entries and they have their stop losses set at the same time. So once they're in that trade, if it does reach their stop loss at any given point, even if it's 3-4 hours into the trade or even days or minutes, depending on what kind of trade it is, you get kicked out of the position for break even if it's very, very tight, close to it, or maybe a 5 to 10% loss. And for those of you that don't use stop losses, I'm sure you've seen crazy losses that have killed some of your portfolios. This is going to help you to avoid that and overall be a lot more aggressive with your trading style. So what's wrong with actually setting your stop loss initially? It's good for the first few candles, but after that, think about it like this, the data is old. So the data that you're actually working with is no longer, the most up-to-date and effective data that's available, since it's old by any defined amount of time. It can be a few hours, a few minutes, or a few days, obviously depending on the type of trade you're taking. So to avoid this, the way that I use stop losses is I use market structure in tandem with the idea of a stop loss. So what it ends up looking like is a trend line that follows closely with my trade, and depending on, the momentum of the current chart, the trajectory of the initial stop loss can veer off, which means that you'll now have a branch and an initial, set stop loss that's moving with the momentum of the trade that actually helps you to exit a certain portion of your trade, maybe 25-33% at that given point, and then you have the other 66% of your position or 75% of your position still in it as it's moving down with the initial one that you had placed in. So it gives you the ability to have a more aggressive or more lenient approach to using stop losses when trading, and that way you can be active on your chart. A great mindset to have is to treat trading like war, like a game. So you want to be very active on the chart, always moving around, always using the new and most up-to-date data that's available to you to make the most effective decisions possible with your money that you're trading. Because simply said, if you don't do this, someone else will, and it's not going to be, you gaining profit to your trade. It's going to be you losing, and you're going to be having the money taken out of your account and just simply put into somebody else's, because that's the premise of it. When you're winning, someone else is losing, and when you're losing, someone else is winning. I don't think any of us want to be buying guys on Wall Street fancy dinners right now, so make sure to pay attention. Going back to what I said earlier about trajectories, it's good to have the ability to exit your position at multiple different points. That way you can secure profits and take advantage of the trends or even the micro trends that occur while you're actually in the position, and you're not not sitting there just waiting for it to reach your take profit. You can actually get ahead of the curve in case the position decides to reverse, and you'll already have taken advantage of the trends and gotten your profit and secured that. Now, before I show you the stop losses in action, first things first is we need to go over levels and something that's more easily able to be understood by the broad amount of people, and it'll also tie into our stop losses later on as well. Now, traditionally what people do is they place their supports and resistances at the relative high or low on the chart. This is completely incorrect, and you actually want to start by scanning the chart from top to bottom. What we're looking for is the levels that have the most consistent touches on our chart in line with the bodies and wicks. Reason being is these levels will actually be the most well-respected ones on our chart and very accurate and reliable to trade off of. A solid rule of thumb is to always prioritize the candle bodies over wicks, since that's going to be the settled volume on our candle. So it's more reliable to follow when identifying the consistent touches, but a few wicks here and there are also good to add in. Now, if this is done properly, the lines that we're placing in our chart should be very, very precise. And this is going to allow us to actually go back in time, maybe 1 to 5 years back, and test to see if these levels are solid, because if they are precisely done and done properly, they'll be effective, and you can nicely see on the higher time frames how well respected these levels are. Now, since they go back in time 1 to 5 years, that also plays into the future, so we can rely on these lines into the future to be predictive, and that our future candlesticks will respect these levels very, very well and just make them stronger and stronger over time. So now that we understand supports and resistances, we can take a look at our stop losses and tie it all in together. We'll start by placing in a zone and some higher time frame levels to see how the candles react to this. The levels are clearly well respected, so now we can actually spot the trade using my trading strategy and find the hidden structures on this. Now, with this short position identified, we can set our initial stop loss of 1 to 5%. As the new candles appear and pull away from our initial entry, our 1 to 5% stop loss isn't going to be as effective anymore, so now here's where we deploy it. We mark out the trends it's creating and take a small percentage of our profits as it breaks these small trends. However, most importantly, we have our actual larger stop loss that's moving with the trade. So how do we find that? It's found by looking at our position and looking at the candles near our actual entry. Now that we have it labeled and we have our definitive structural line on the chart that's also acting as our stop loss for the entire position, and it's moving with our trade as it's progressing. However, as the candles actually bounce off of our red descending line here, it's actually reinforcing it and making it a lot stronger and applying more pressure to the buyers and causing the sellers to take over here. So to give a small recap, we divided this position into 3 different exited parts, and here's that trade looked at entirely. The key thing here is that we have a stop loss that's not set in stone, and it's also not a trailing stop loss, but instead it's actually allowing us to be active with our trade and be more aggressive and effective with our positions to make the most out of them. I appreciate you guys for making it to the end of the video here. If you have any comments about anything I talked about, go ahead and leave those below. The links are also going to be in the description. I've got a Discord with around 50,000 people in it right now, and I'm live in there every week. So make sure to go ahead and join. All this stuff's free. Anyways, take care, guys. I'll see you guys in the next video.